For more on the next move from Netflix, let's bring in Atul Bagga. Atul covers Netflix for the research firm ThinkEquity. Atul, great for you to be with us today. And let's start with that Facebook relationship. We've heard a lot about it. You guys keep asking him questions about it. But what about the money involved at the end of the day? What could this be worth, teaming up with Facebook in this way?
Yeah. It's interesting you asked about Facebook. If you remember a couple of months ago when Warner Brothers launched their application on Facebook, the stock came down because everybody was worried Facebook is getting the video renting business. The fact is that Facebook is an open platform. And it's not just a proprietary of Facebook is not renting their movies, not renting movies by themselves. It's Warner Brothers who is an app. And Netflix also has the same position. They can integrate with this open platform and they can enhance their offering. I think three vectors for Netflix with Facebook. Number one, it's going to enhance the recommendation engine. Right now, the recommendation is all driven by algorithm, but by involving the recommendation from your friends, I think you can enhance the quality of recommendation and thereby increase the stickiness of the users.
We ran a soundbite from Reed Hastings on Charlie Rose. We want to play another one because you have to wonder what the theaters are thinking about this. Is Netflix trying to eat their lunch? Well, Reed Hastings actually said, no, we need the box office. Let's have a listen to what he said to Charlie Rose.
Because so much of the downstream revenue is linked to that initial excitement, to how much revenue is produced in the domestic box office. For example, what we pay for a film 3 years later is highly correlated to how well it did in the box office. So there's a big incentive to continue to have that happen.
So he said he wants to stay friends with the movie chain operators. Is that true? Are there actions reflecting that?
I think that's absolutely true. I think for studios, there has been, this is one incident you talked about, the theater and the relation with Netflix. And there's another class of thoughts that people who say sometimes studios are enemies of Netflix. I don't think that way. I've spoken to a couple of studio heads. And interestingly, for studio heads, this is kind of becoming a new revenue stream. This is something which they have not historically addressed. And now this is kind of found money for them. So it is becoming a very, very interesting business model for them. True that for them, for studios, the business model is changing. They historically were used to of operating business in very clearly defined windows. You had windows for theater, windows for DVD, windows for pay-per-view, and those windows are kind of becoming blurred now. But I think this is kind of a newfound money, and studios are looking more closely at this online streaming business.
Everybody always asks, is somebody going to buy Netflix? It's challenging for one studio to make that move because another studio gets angry, but you think one of the folks in Silicon Valley might have some interest in Silicon Valley.
That's a great question. I think if you look at Amazon, they recently launched their subscription service, and my sense is you'll see some step coming from Google as well. Google has been off late a little more aggressive in terms of monetizing YouTube. They've started offering the premium video channel on YouTube. My sense is if a company like Google or Amazon or Apple wants to get more aggressive in the space, it probably makes much more sense for these companies to look at Netflix as an acquisition target.
Very quickly before we go, you're bullish on the Netflix stock. It's had this huge run. There are a lot of people who are bearish and more who are bearish after their recent quarterly results. What's the one single reason why you still think this stock is going to climb?
I think that they have three vectors of growth. Number one, integration with social media. Number two, you have the family plan, which in my view is coming with the integration with social media. And number three, it's going to be the international opportunity. Right. This is just getting going. So I think they have a long way ahead.
Atul, thanks for your time. ThinkEquity's Atul Bagga.